Hey everybody, Dave Cristello here, founder and CEO of Jetpack Workflow and host of Growing Your Firm podcast. Today, we have a returning guest, friend of the podcast, Roger Knecht. He's the president of Universal Accounting. He's been on a couple times before. Every time we have him on, the takeaways from the community show up in my inbox. They show up on social. Always excited to have him back. We're going to talk a little bit about the business and then talk about ways to identify what to prioritize, as well as the three core services in your firm. And I'm sure much, much more. But first, Roger, welcome back to the show.
Thank you, David. It's a pleasure. Thank you.
Yeah, of course. Well, for folks that don't know about Universal Accounting, what do you do and who do you do it for?
We are a post-secondary school for accounting professionals. We principally work with individuals that are the owners of accounting firms, bookkeeping services, tax practices, CFOs, EAs. We help them both start and build their accounting businesses, either working directly with the owners or training their staff, offering them the training, certification, support they need to build and have what I refer to as the premier accounting firm in their area.
Okay, I love it. So, Roger, curveball for you right at the top.
Yeah.
Last couple of times you were on, I think there was one time we were in the kind of the middle of COVID and we're navigating this new world. We've been talking for the past couple of years on the podcast, just how much of a rush of demand accountants have felt and how they've leaned in or needed to lean into remote teams, cloud-based software, like of course, workflow, pricing models, advisory services. Have you found in your community that trend has continued, or is it kind of like for 80%, they're like, no, we're going to retreat back to 2019. It's like business as usual, and kind of the land rush is over, and it's kind of steady state again.
No, I think that this is continued, but for a different reason. Yes, you're right. During the COVID years, we actually had instances where people were dealing with the PPP type things. They were getting loans. They were dealing with layoffs. There were a lot of variable parts, and they were reaching out to their accounting professional to understand how do they qualify for these funds? How do they deal with these issues? Today, it's different. What I have found, a lot of firms are now dealing with businesses that are affected by the inflation that's going on. Their business model is being affected. They've got to figure out how do they deal with inventory issues, inflationary issues. So their clients are in a situation where their model of business is needing to adapt to the current situation. Obviously, there's a lot of talk of recession and how it may get worse in 2023. And so as these businesses try to cope with those various changes, they need to lean on their accounting professionals to help guide them through this. So if you're thinking that things are going back to 2019, I would completely disagree. Those that I work with are finding that there's much to discuss with their clients and assist them with as they're now navigating this inflationary, recessionary type period.
Yeah. Well, without putting on our macro, economics hat, we're maybe going to go into one, probably going to go into recession. Some people said we're in a recession. How should firms think about the state of 2023? Maybe this will help us lead into the priority question, but there's all these tea leaves, inflation, like you said, it's changing the way people are thinking about their logistics, thinking about their inventory, thinking about their staffing. Lot of content coming out. Of course, maybe some of it's to catch eyeballs on the headlines, but people are really worried about 2023. So for accounting firms, how should they be kind of going into the new year?
So I'm going to stress, I think, two key things that as accounting professionals we can be doing with our clients. First and foremost is recognize that so many of our business clients struggle with cash flow. And so often what they're looking for is how do they adapt based on their payables, receivables, and so forth. And the accounting profession has a place to fill in and address those needs. So the easiest way I can answer that is first, the business owner, they're just going to need to, in this time of uncertainty, find that we have solutions, answers. We have options that they can actually consider to implement in their business to address these frustrations. Anytime the business industry is dealing with uncertainty, I think the accounting profession is where they lean to figure out, okay, I know this is working, but what can I change or adapt? And that is, I feel, our role in the accounting space. And so that's what I would say there. The second thing I would say is also from a tax perspective. We're always keen to tax strategy, tax planning. And so often I think if as tax professionals, if that's something we're offering as a service, if we can go in and provide something as a strategy to help them legally mitigate their tax liability, business owners are very open to that. And if we can come in with various things that can be implemented throughout the year to help keep the money that we're making, the clients are going to be happy.
Yeah, I feel like it's a big red flag if your clients aren't coming to you with these questions right now. There's probably some sort of lack of visibility or level of just being unsure, if they should reach out, if it's appropriate to reach out. So it's kind of a red flag if they're not talking to you about 2023 and fears around inflation and recession and everything we just talked about. It's probably time to get on the phone, send out a couple emails, let folks, to start having talks with your clients. Would you agree?
I would, because I would worry if I were someone working with a number of business clients. No news isn't good news. If they're not communicating, I'm worried that they're actually in a state of fear and possibly looking at shutting down the business or retracting in the industry. I would rather be in open communication, regular communication with them to help them realize here's how they can be pivoting, changing, adapting to the new business model and maybe address things to keep their margins high. Inflation is a great example. I work with a restaurant client, and as I worked with them, they were being dramatically impacted with the produce that they would purchase. They were a Mexican restaurant, and they had a variety of locations, and their jalapenos went up 3 times, 300%. And in trying to address that, they were seeing these other things happening with their menu items, and they needed to answer the question, how do we increase our menu pricing? And it wasn't just some arbitrary number that they had to come up with. It's basically going back and with the financials, seeing what historically was the margin and knowing what the cost of goods were now, what should the price point be to at least retain those same margins. That's where we come in. This is our aptitude. And therefore, as a business owner, I was able to help them kind of navigate and answer these questions because they knew something needed to change, but they needed the assistance to make the change. And that's where we have so much to offer. But the business owner sometimes isn't thinking, oh, I need to ask the accountant. We need to be volunteering these things, looking at the P&L and showing these things are changing. Are you aware that your margins are getting smaller? Let's adapt this. Now's the time to discuss price changes, cutting costs, new vendors. This is what we need to be doing with our business owners, is helping them do what they do best, which is adapt and meet the needs of their own customers.
Yeah, goodness gracious. You just thinking about all the ups and downs. I don't want to go too far down a rabbit hole here just yet, but these business owners, they must be thinking, man, there has to be an easier job for me to do. If you're in retail and you got shut down and then you come back and then there's inflation, it's goodness gracious.
Well,
Uh,
I'm going to add to that.
yeah,
We both know that there's been supply issues. You've got basically this year in 2022, a lot of inventory that was stuck offshore as it was trying to come in
right.
through the ports. You've got strike talks that are going on with the rail yards. I mean, there's a lot of uncertainty as to the supply chain. And so when you're dealing with, as a retailer, what am I going to be doing to put on the shelf the things that I need to sell to pay the bills? There's a lot of moving parts that are going on now. And whenever you see the business owner as a client stop communicating, it's almost, in my opinion, a sign of fear. And what we need to be doing is proactively reaching out to them and saying, how are things going? What's happening? Are you noticing any changes? What do we need to be discussing? And every time we prepare the financial reports, we should be doing the analysis of the margins and the trends to be able to say, hey, first quarter, your margins were this, third
Mhm.
quarter, they're now this. Should we be talking? Has something changed? And let the business owner communicate what that experience is. And then we can now start asking questions. Our job isn't necessarily come up with the solutions. Our job is to be asking the right questions.
Yeah, pick out those red flags, because my question was going to be around the example you gave. I mean, I think it really articulates just how much value an accounting firm can deliver. I think part of this is if you're dealing with great clients, then they want you to lean in and give you that information. If they're being a
Mhm.
little elusive, they're probably being elusive around paying the bills and things around that. But I was going to ask you, how do you price menu pricing, inventory optimization, right? Somebody might be listening. It's like, oh, that sounds great. what do I just, I mean, how do I even wrap my head around a project or proposal to help you think about margins for your menu when I'm used to just doing the returns, doing the books? How should somebody think about that?
So I'm going to answer your question, but at the surface, it may appear as if I haven't. So we may have to circle back, but let me answer it and see if you want to go deeper into this. I
Okay.
feel the best way to begin answering this question is, first of all, as an accounting business, determine very clearly for our clients what are the services we're truly providing. And I think this is where a big disconnect happens. We, as an accounting profession, in my opinion, we struggle to clearly define for our clients what they can expect of the services they're paying for. So I'm going to explain in very simple terms, I feel, what we can be bundling. And for the client, it should help manage expectations and our deliverables. So here we go. There are three core services that a firm should be considering offering. And it's their choice whether or not they choose to do them or not. But the first is accounting and bookkeeping. The second is tax planning and preparation. And the third is CFO and advisory services. So let me define these. They are made up of 6 key elements. Bookkeeping is everything that's done to prepare the financial reports. At that point, once the client receives from us the P&L, the balance sheet, the cash flow statement, the bookkeeping role is complete. We've basically given them the information they need to run the business. But we haven't done the accounting. The accounting now is actually taking that information that the bookkeeping process provided and interpreting that. We're doing basically last month compared to the previous month. We're taking last month and comparing it to the same month last year. We're taking first quarter to previous or to the previous quarter. All these assessments are meant to actually, as an accountant, do the analysis to actually bring to the business owner things that they need to be aware of. What are the red flags? What's changing in the business model that we need to address? What's happening with regards to cash flow? Do we have the funds that we need to pay the bills? All of these things are at that accounting level. And if we're not providing those services, then we're not charging for those services, or vice versa. If we're not being paid for those services, we shouldn't be providing them, because that's a definite value that should be compensated for. Let's talk about tax planning and preparation. Preparation is very simple. It's just filing the returns. If we're actually preparing those returns and submitting them for our clients, we're doing tax preparation. But tax planning is so much more. That's where we're doing things such as strategies related to R&D tax credits, cost segregations for property owners. It's where we're doing maybe tax resolution services. That strategy side is different than just preparing the returns when it's tax time. When it comes to CFO and advisory, CFO is, are we working with the client offering a service that helps them actually implement in their business cash flow strategies, standard operating procedures, policies regarding collections and payables? Are we working with their vendors? Are we working with the banking institutions or the people providing capital? Are we helping them with all that money and establishing in the business proper business policies to help the business stay afloat? That's at CFO level. The other advisory is business related principles that the business can implement and work on their business. Well, if I'm an accounting firm and I don't do tax planning, and I don't do CFO, I've got a menu offer of bookkeeping, accounting, and tax preparation services, period. And that's what my clients should expect from me, because that's what they're paying for. But I do feel too often what we're doing is we're not clearly defining our role and what they've paid us to perform.
So the way I'm interpreting that, because I do think it answers the question, we're maybe not getting, but it should be, if you're doing forward-facing work, if you're leaning into advisory and CFO planning, you should, that should be bundled into a premium tier. They're going to be paying for that premium tier. And so you should be seeing this data that then leads to them to take on the project to say, we need to update our menu prices because our margins are dropping. And the reason they know their margins are dropping is because, hey, Mr. or Mrs. Accountant called them up and said, hey, just looking at year over year margins, and it's down 10, 20, 30, 40, 50%. And they're going to say, well, of course it is. Jalapenos are, they've tripled. And they're like, well, we got to figure that out, and then you can kind of run line item inventory against food costs. So kind of trying to bundle that into the packages so that it doesn't show up or come up as a one-off thing you almost kind of quote unquote randomly have to do. This should be part of the relationship.
I'll lean into it even further with another example. Imagine, for example, that you've got a client that expects bookkeeping services. Boom, you provide the financials. Let's, however, imagine that I'm taking that information. I'm noticing in the cash flow statement that there's less money in the bank than we started the month with, but yet sales were up. well, there's something confusing here. Why are sales up, but I have less money to show for it? And I'm noticing that I'm moving myself towards a cash situation where I'm not going to be able to make payroll or pay my vendors, pay my rent. Sales are up, but cash is going down. So I need to recognize that there's something happening in that transaction that needs to be addressed. So I come in with a CFO kind of perspective, and I'm going to meet with the business owner and say, you're selling, which is awesome, but the problem is you're going to push yourself into a corner here, and you're going to have to start getting capital. Why don't we change your policy that every time you make a sale, the customer is required, if they choose to not pay up front, they need to make, let's say, a payment, a cash payment of 25% of the purchase price or 50% of the purchase price, so as to fund some of the costs that are associated with that sale until it's delivered.
Yeah.
I had one of my clients that had that epiphany and realized they didn't need to be a bank. Every time they sold something, it wasn't necessary for them to self-fund it until the product was delivered. So they started to ask for 50% up front whenever the sale was made. Game changer. All of a sudden they had this. And one of the things that was helpful is they were a small enough business. They felt that that policy would be hard to implement because everybody knew they were the owner. And I said, no, 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 no. You just need to go in and say that this is the policy, and that your your controller was insisting that these were the policies. And he just leaned into it and said, well, we've got a policy. If you're a customer and your sell is this and that, he had some parameters, then we require a 50% down payment on the purchase. He could lean into the policy, and the customer who tried to play him of, oh, we're friends, oh, you're the owner, I've been doing business with you forever, he could lean into the policy, and all of a sudden that gave him comfort to implement. Now all of a sudden his business was functioning because it had the cash flow it needed to pay for the materials to provide the product that they were delivering, and no longer was he fronting the money, the capital to do this. That's the CFO hat. That's not the bookkeeper.
Yeah.
That's
Yeah.
not the accountant. The accountant perhaps identified it, but the CFO is going in and helping implement a policy within the company. Is this helping?
Yeah, absolutely. I mean, it makes me, as we're kind of going through that example, I think some of the things that is sometimes hard about being a firm owner is what's the right problem to solve, right? So, is it, do I need to adjust prices to better fit, you know, the margin target? Like, have we not increased prices for the last decade? And we need to increase prices, and that gives us the margins. Or, wow, we've never really documented our processes, and so that's why our margins are down. It's like, well, the answer is kind of both. You could do both, and both are going to help. But where do you start? Or you could take it the other way, which is like, margins are terrible. We need more cash. I need more clients. That's how we solve the problem. It's like, that could be an issue, but that is not the issue you need to start with. Your pricing's out of date. There's inefficiencies in the workflow. Then go get more new clients versus like trying to add more to the kitchen sink. So with all the opportunities and challenges a firm owner faces, how do they then prioritize what to take on next, right? Like, especially for
Excellent.
listeners of the show, right? We're giving them ideas, every other week. So how do you know which one to pick up and run with?
I love it. So excellent question. Here at the first of the year, I would definitely agree that this is a question that we all should step back and ask. So I'm going to basically share with you a thing that we teach. It's called mapping the business. MAP stands for, it's an acronym, and I'll teach you what it is, but it basically is 3 questions that we have to ask. And doing these 3 questions helps identify what is that next thing we need to be prioritizing in our business. It's either the fear or the opportunity that we feel is the next thing we need to be resolving. So here we go with the 3 questions. The acronym MAP, M stands for marketing and sales. So the first question is, are you in a position where you need to be growing your business? If you're in a growth mindset and you need more clients, then definitely MAP begins with M, marketing and sales. That's a priority. However, you might be in a position where you say in your firm, I don't need any more clients. I'm plenty busy. I don't need any more clients. However, I feel the accounting services that I'm providing, I need to actually increase the value because I believe I'm not pricing my services enough, and I need to increase the value that I'm providing so I can charge more for what I'm getting, thus increasing the revenue per client that I'm being paid. If I feel that I have enough clients, but I'm just not making enough money per client, I'm going to be doing some price changes. I need to increase maybe that value and charge more and so forth. But I may have, as a third question, plenty of clients. I don't need any more clients. Love what I do. I think I'm fine with my pricing. But my third issue is related to production, P. The production is, I need to be more efficient. I need to look at technology, standard operating procedures. I need to find a way to be more efficient, therefore freeing up more time. I don't need to be working as much as I have been. I don't need to be working nights and weekends, missing on holidays. I can be more efficient and therefore more profitable with the work that I'm doing. So you get to pick one answer. There's three things here. Most business owners, when I talk to them, they want all three. No. You get to pick one. Is the priority in the next quarter that you're going to work on your business to grow it, offer more valuable services to increase the fees that you're charging your clients and justifiably do so? Or is it you're going to double down on the workflow efficiencies that are taking place in your business to actually ensure that you're doing the work more timely, therefore more profitably? And whenever I get a client that speaks of mapping their business, what we do is we just identify which of those three things we're going to prioritize, and that's what we double down on and we work on for the coming quarter, if not more. And that business then improves in that specific area with intent.
Yeah, I love that. So you think about 90 days per area. You said, well, 90 could be 180, could be more.
Mhm.
But think quarters, don't think months, don't think weeks. Give yourself
Yeah,
a quarter.
it's definitely a quarter effort. Generally, what I have found is it takes a few weeks to kind of mentally figure out what needs to be given the attention in that process, whether it's marketing, the accounting services, and so forth. So it takes a little bit of, okay, what are we going to do? And then it takes a period of time to implement. Okay, we've got to put some processes into place, whether they're accounting related, marketing related, production related. You got to assess maybe in the production side what program, software, process you're going to change. And then it takes, after the implementation, you've got to give it time to now kind of bear fruit. It takes a little bit of time to see, is it working, and then assessing whether or not it's going to be tweaked, or we're just going to document it and continue with it. And that's all in both the marketing, the accounting, and the production side of the business. So it takes about 3 months or more to go through that cycle, is what I have found on average.
Got it. Got it. I have a bit of a curveball for you, Roger. Maybe the second one of the show. We were talking a little bit about, the restaurant owner earlier, and he said, they went through COVID, shop was probably shut down. That was probably open. That was probably shut down again. Now they're going through inflation, staffing issue. Every industry is hit with staffing, with turnover, trying to get great people back in. Then you have these trends around boomers retiring and selling off businesses. I was like, if you didn't have a reason during COVID, you now have a new set of reasons. I got to deal with inflation, got to deal with staffing. So I feel like M&A is going to be at an all-time high over the next 3 or 4 or 5 years. How do you see the potential for the accounting firm owner to kind of be a value-added stakeholder in that? Because we're going to see more businesses sold for the next couple of years than we've ever seen before. And so have you seen firms kind of lean into that? Have you seen them, build joint partnerships or relationships with brokers? Like, I don't know. Is this even a topic of conversation amongst firms today? What have you been seeing?
So I'm going to share with you a conversation I had. It was a few weeks ago, maybe a couple of months ago, and it was regarding this very specific topic. What it was is the accounting professional in their firm recognized that there were going to be some mergers and acquisitions, some of the clients acquiring other companies, and some of the clients that they're servicing being sold off and absorbed into other entities. And what they recognized is they needed to become much more integral in the relationships with these owners so that they could actually grow with the business. And so here's my point. If the client you're working with is intending to acquire other businesses, you can come to the forefront as being that resource they need as to where are they going to get the funding, the capital, what are they going to be doing to acquire the business, determining the valuation of the company they're about to acquire and making sure they're getting a fair, making a fair offer. It's being involved in a lot of those elements that the business owner is stressed over as they're trying to expand. On the flip side, if they're going to be absorbed by another business, whether it's through a merger, a sale, and so forth, you want to be so ingrained in that business process that when the acquirer comes, they want you to keep doing the bookkeeping and the accounting because you intimately know the business model. The last thing you want to do is be in a position where your accounting, bookkeeping, tax services are indifferent to the success of that company, that the acquirer says, I don't need you. You want to be so valuable because of the tax strategies you're providing, the CFO guidance that you've offered the business owner. They want to, as they're assessing the business, see how valuable you are to the success of that company that they're about to take on, that they can't sever you and get rid of you. So this conversation that I had with the accounting professional was they needed to improve the relationships that they have with their clients for this very reason that you've brought up. Some of the clients are going to be acquired, other clients are going to be acquiring, and they want to be an integral part in either process.
Yeah, yeah. I love it. I love it. No surprises between accounting firm and their clients. You should know what's going on, know what's on the roadmap, know how they're thinking about things. Roger, it's always a treat to have you on. I think this is you've been on 300 times, 400 times, at least a couple of times. We'll go back to back. We'll probably do this every year. If folks want to reach out, they love the information you just dropped on the show. What is the best way for them to connect with you and the community?
Please connect with me on LinkedIn. Love to make those connections there. Visit us at universalaccounting.com. I've got a number of free resources there, especially regarding this principle of mapping the business. It's found in one of the books that we offer for free called In the Black. Just go to the free resources. You can get an ebook copy of it, as well as a number of other free resources. I've got my podcast there that you can definitely learn from. It's Building the Premier Accounting Firm. Love to have you listen in and definitely subscribe for it. But lastly, we have universalaccountingschool.com. It's there that we actually have a variety of programs meant to assist the owner as well as their staff, offer quality accounting services, get paid what they're worth, and most importantly, have the premier accounting firm in their area.
I love it, Roger. It's always a treat to have you on the show. For folks listening, if you couldn't jot down everything you talked about, we're going to link everything up at jetpackworkflow.com/blog, jetpackworkflow.com/blog. If you enjoyed this episode, leave a review, helps us get the word out. And if you really loved it, share it with a fellow firm owner that needed to hear something Roger talked about today. Again, Roger, thanks again for coming on.
My pleasure. David, you're awesome. Thank you.